In less than 24 hours, we may know the outcome of the US 2024 election, but how has Wall Street been positioning from both an investment and trading perspective? Will we get gap fills to the down or upside during the day? In today's video, we take a look at the dark pool activity, the huge options flows, and of course, the hedging that has been happening underneath. Will the VIX explode with volatility after the event? Or are there just too many puts in the market right now? We've got the data, we're bringing it to you right now today, and of course, we'll be going through the instruments that we need to be watching during the day. Stocks, commodities, and cryptos, let's get into them. This will be a great one. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss because of course the US election is literally happening in 24 hours. And of course, we may even have the outcome very early, or possibly we'll be stuck for a week waiting for all sorts of different things to get cleared. Let's now discuss though what's happening here with the SP500 and of course the VIX put-call ratio. Now we know Wall Street has been already hedging into this event for quite some time, but what you may not know is there are 2 times more puts out there on the markets at this point. In fact, 2.3 times more puts, and this puts us into a very particular period. Now, if you've been watching our channel for a while, if you're new here, make sure to subscribe. You would know that we often use the put-call ratio as a contrarian indicator. And when we get to these high readings such as 2.3, it can tell us that we're near an inflection point in markets, often seeing a bounce at these areas and markets driving higher. But let's dive a little bit deeper into this. Here's another read taken from a put-call ratio here from Tom McClellan, and you'll notice that it shows the same type of thing. In terms of VIX futures and term structure, we already know there's a huge amount of hedging coming into the event. But the key here for us to understand as traders and investors is really down to this chart. So what actually happens when we have an overly hedged election? Well, in this case, the S&P 500 forward returns are very interesting. When we have volume control such as we've had in 2024, it generally means that these will need to be removed after the event. And it leads into sometimes a huge amount of tape buying over the next 2 weeks. Remember, with elections, it is actually usually a very positive time for markets, with markets often going bullish in the subsequent weeks post the election. Now, of course, this is just a chart for volume control. So if you take a look at the next 1 month and 2 month reads, you may notice that the hit rates are very, very strong in terms of the overall bullishness of markets over this period. And this could mean that FOMO starts to take hold, and maybe some of those predictions of 6,000 to 6,100 even by the end of the year could come true. Now, I know it doesn't seem like that right now, but do remember we are climbing the wall of worry. And while we've been talking about pullbacks that need to come into the market, remember the average pullback that we expect is around 4%. We're currently sitting at about 3%, and we'll talk about the idea of getting 4% and what that could happen or look like on election day in just a few moments. When we take a look at Goldman Sachs bull market or bear market indicator, you'll notice that on the higher time frames, things look like they're pretty elevated. But don't look at these types of indicators as an instantaneous, oh yeah, it's going to go down. Of course, this just shows you that you're in a pretty high percentile in terms of valuations at this stage. But as we know, we're in earnings season, so that may change. So what about when markets have a 5-month win streak and it comes to the end? Well, as you would know by now, October was actually a negative month. And this means that yes, the great bull streak is technically over. But is that bearish when it comes to the markets over the next 6 months? Does momentum continue after taking the L for 1 month in total? Well, the answer is pretty much yes. If we look at 28 and 3 over the next 6 months with a lot of reads on the left-hand side, that is a great sign when it comes to market bulls. And remember that even the pullbacks over this period were not that bad. 5.66 down, 3.35 and 1. Well, that's not as bad as most people would expect. But if you look at the 12 months, well, things can get a little bit shaky. Some of big pullbacks sometimes do occur over that period, going from a 25 and 6 instead of a 28 and 3. Let's now jump on over to whether we expect any of these things right now. Well, of course, if you look at how Wall Street may be perceiving the market, they might think that it's a soft landing. Everything looks good, and the NVDA recession index obviously is showing no recession for now. Now, is this a late indicator? Yes, but the momentum is certainly not in the favor of a recession at this point. It's pretty much in the ground. So soft landing is at least the scenario that Wall Street's looking at, and a Goldilocks style situation. Now, does the news get better when you look out at these stats? Well, of course, another one has been the SSI indicator, and that's usually a reliable contrarian indicator. When it's above or around its current level of 56.7, it generally suggests that the next 12 months are bullish for a return of 11% on the SP 500. Now, I've got some other stats that I'll share in a video up and coming, so make sure to subscribe for that are very interesting about the next 6 to 12 month outlook, not just from the data, but also from the market structure. So I'm looking forward to sharing that with you guys. But I thought we could talk about elections here for a moment. Now, I'm sure you're sick of them, but of course, there may be some outcomes for particular instruments. Now, we'll go through this chart a little bit more, and I did want to announce we will be streaming from around 8 p.m. ET tomorrow tomorrow for me, and obviously Tuesday for everyone in the US during the election to look at instruments and things that are moving. There may be some large moves, and we want to be covering those, of course, as they happen. It's always a great event. It won't be getting political. We'll just be talking literally about the markets and what's going on. Now, we'll go through these scenarios that Morgan Stanley has and others at the point, but I did want to kind of cover some Trump and Harris win style stocks because a lot of people have asked. And these charts are taken from Lynn over on X. I think they're pretty solid in terms of the thought process. And in general, which is going to be the largest move for the session? Well, it is, of course, going to be DJT. Everyone could have guessed that. This one could move like 30, 40% during the session. Expect some wild moves. Really, the Trump situation is going to be initial moves in cryptos, initial moves in oil, and you're also going to see, of course, banks. We've talked a long time around things like of course, regional banks. And we've also paid a lot of attention to Tesla recently. And both of those will move quite a lot on a Trump victory, I would suspect. Now, in terms of Harris stocks, you've got solar. Solar's been something that's actually got a very good structure on it that we've covered on the channel for the last kind of week. And that's been doing actually very nicely. So could it be showing something? Who knows? I wouldn't follow those flows necessarily from that perspective. But there are a lot of solar stocks, and of course, there are a lot of policy-based stocks here if Harris does win. Now, what about who wins? Does it matter? Well, not really. From the 2020 post-election launch, we see a huge move, and obviously, we generally, in speaking, do see moves to the positive side when it comes to elections. Remember, whether it's a Democrat victory or a Republican victory, from the market perspective, it really comes down to how much do they win by? Do they sweep? That can change overall returns. And of course, a hung Congress usually is the more positive kind of side for the markets. They're able to forward project and figure out what exactly is going on. Whether it's Democrat or Republican, though, do remember as an investor, generally markets are up. Now, where are we in the cycle? Are we at a point where if we get a new president of either side, are we going to instantly crash or something like that? Probably not. We're around 2 years into the current bull cycle. And while I don't agree we're on these big runs again, we're probably around 2/3 of the way through this current cyclical period. Now, is that important to note? I think it is because, of course, leading into 2025, you can be scared or you can be somebody that's climbing the wall of worry. And at the moment, the wall of worry is, of course, there because we see that in the put market. When we take a look at Carson Cycle Composite here for the S&P 500, which is obviously a Carson proprietary indicator suggesting that there is potential strength coming soon, it's really the same type of thing. Basically, what it's showing is a strong November, December, which tends to ride through the small caps and mid caps. And the mid caps are the interesting component because as you'll see in a moment, there's a lot of dark pool activity in the mid caps. The best 6 months of the year are here. Yes, from November to April. That's 77% stat of overall bullishness and 7.1% average change. Nothing to sneeze at. Most of the gains tend to happen around this period of time. And obviously, May to October, it's a totally different ballgame. 1.7% with a 64.9% read. Now, this is where things get really interesting. Remember, we've been talking about this one. I haven't actually taken this chart off for what feels like 2 weeks now. And it's because what we were learning from this September bull market, and that is we were actually at a new all-time high during September, which is pretty unusual, that we were in an unusual period. We bucked a lot of the seasonality trend, that is we went against what most times markets do ahead of US election. And as you'll notice over on our X account, following links down in the description down below, you'll see flows have actually been coming in pretty strongly into the US election so far. What that's really telling us, though, is that if we are to take this market 100% of the time into the end of the year, in positive September months, we've been positive into the end of the year. However, we've generally seen drawdowns in the vicinity of around negative 4%. Now, as you'll find out in a moment, that's exactly kind of what we're leading into this year. So before we go through that, let's just quickly talk crypto. Is crypto looking good into the election day? Well, here's an interesting chart from Macro Charts. We shared it. I thought it was pretty cool. Flows are also coming through, which you'll notice in a moment. But it said here in elections, we tend to see the beginning of a very decent run in crypto. Now, don't expect 10,000 or 2,500%. We talked about our models, which we'll bring up in our live election show as well for Bitcoin moving forward. And what our models are kind of showing is a little bit different rate, but still an overall bullish run. So some good stuff happening there. When it comes to Bitcoin inflows, are they positive? Well, the answer is yes, they're actually peaking here into the breakout. And I think that's important. Now, a lot of people are noting, well, look at this. When we saw previous peaks in the ETF, we actually saw the topping of markets and it fell off afterwards. That's true, it was temporary sells, but you've got to remember this is also a technical analysis breakout. So we're seeing a breakout on the TA side, not an already existing flow kind of run. And in these other previous situations, we weren't making higher highs, we weren't bucking the trend. That's exactly what we did over here. We changed the trend to the upside. The structure is better, the technical analysis is better, the flows are better. Very important when we are considering markets to always look at the overall picture of things. When we move through to earnings, of course, it's very important for us to go through this week. Now, I don't know if I'd want to be on earnings this week. I think it'll be overshadowed by the Federal Reserve, which will come out. My opinion, by the way, for the Federal Reserve is 25 basis points. Doesn't matter, probably not, but you'll find out in a moment why we will be paying a little bit of attention to the Federal Reserve. But Palantir came in, and of course that was quite a large move after hours. We have ARM, we have other big names coming through, a lot of mid caps kind of doing their stuff this week. But this really marks the end of the major earnings season. And just remember the expected moves. So if you're someone trading Supermicro Computer, 16.7% up or down. Airbnb 8, Block 8.3, Cloudflare 11, Rivian 13. These are what the market expects, the options market expects in terms of overall moves. So I want to talk a little bit about dark pool activity. We love covering this on the show. Often it gives us edge with technical analysis. What is going on with the iShares Russell Midcap ETF? Wow, that is a lot of trades in like a week and a half, 2 weeks. I don't know if they're buys yet or if they're sells, but we need to pay attention to that. IWR getting a huge amount of transactions. Some other large transactions coming through. Treasuries, of course, potentially starting to build a base, and people are starting to potentially position into treasuries here. Of course, Druckenmiller, Paul Tudor Jones, many others coming out and saying treasuries suck, but at the same time, they were probably short a while ago on them, and now it looks like someone may be building a position. We'll keep watching that and look for the technical analysis. When it comes to the S&P 500, we've used some of the large transactions at the top to show us initial weakness could be around. So far, we've pulled back to a key level. And as you guys would know, this is a demand zone. We'll look at that in a moment because there are two really key levels or three really key levels that the options market is starting to suggest we need to pay attention to. And then, of course, there were the Qs. The Qs are still falling. And at this point, this is an interesting level sitting around 480 on the Qs. And there's a gap fill just underneath that we'll talk about soon. And then there's the semiconductors as well. Bear semiconductor funds getting involved over the last couple of sessions. Let's talk flows. Flows have been going the way we kind of suspected. We've been seeing solar and clean energy get a lot of flows into them. Why? Well, who knows? It could be because things are starting to kind of go up and down all around in terms of the US election. But really the main key here was the technical analysis was very solid when it came to solar. And we're getting a lot of movement in energy, which we suspected on the short-term markets. Remember, we went bullish on this last week because we saw some short-term bullishness. Now we're at resistance, which we'll see in a moment. Solar over the last 5 days is now the best sector in the market. All right, let's move over to the S&P 500. What are the keys that we should be looking at? First up, I would say being below the daily 20 moving average obviously puts the bears in control. It's usually a solid read of who's in control each way. Are we at a solid level of support? Well, yes is the answer. Of course, we've seen 5,700 be very, very key in terms of put walls. But you may notice that we start to build a lot around 5620. Now, 5620, I'm not sure how many people are talking about this particular level. I like it a lot. You've got gap fills, you've got very well traded area, you've got anchored VWAPs, you've got all sorts of things coming in around that zone. And you also have one of our favorites, which is the weekly 20 moving average. Now, remember, the weekly 20 has held the entire time. You might say, Tom, what the hell is not holding here? Well, it was, because did it close below it? No. It actually gapped below it, then rallied straight up. So you've got a very, very, very strong level at that 5620. So well worth watching. Now, why do we pay attention to it even more than that? Well, let's actually take a look at the futures here and measure from the top to where we are now, -3. Okay, that's about what you would expect. But remember, we thought maybe there's a -4 here. Well, it just so happens that 4.5% down, pretty much spot on the average of that September data, we see here the gap fill. So 5620 is pretty serious, and you'll notice that the options market tends to agree. Let's take a look at that together right now, and we're going to use the options data from, of course, the election day and then post it. So what about the election day? Well, if we take a look at the election day, you'll notice 5,700 is the most struck put wall, but there are puts everywhere. There's a lot of people speculating volatility is going to come through an election, and if the markets do go down, could it be that actually a lot of hedging will need to be taking place and it goes to a waterfall, or will it quickly bounce and get back above this zone? Well, a lot of the market is suggesting that this 5,700 is super important, and how, of course, the closures end up happening this week could have dramatic implications to the overall OPEX of November. Have a look at this though. 5,700, 5,620, 5,500. The major three put walls. Where are we looking at in terms of calls? Well, you can see up here, it's really that 58.50. And as we know, 58.50, 58.60, we break through that, all-time highs we're going to get to, and probably go super positive gamma and everything looks much better. But these three zones keep coming up throughout most of the overall different options expiration. So three key levels to, of course, be paying attention to. When we move over to some of the stocks that you guys like to cover, let's have a look at Tesla, 260 call wall. Unlikely that, of course, gets breached during this particular next 24 hours. But 240 seems to be the main kind of line for the puts, and 230 when we look at next week. Can we gain anything from this? Not really. We just know that 260 is a huge call wall, and it's probably unlikely to get through that. From the NVDA side, things are a lot more neutral. Of course, we're sitting at about 140 in terms of the call wall, currently 136. If we get back above 140, the market starts boosting. Then could we go to 150 pretty quickly? Yes, I would think so. And of course, NVIDIA, we do remain bullish on that over the next couple of months based on what we've seen. Now, let's move over to the charts. First up, a lead indicator, the MOVE index. Now, when we look at this, a lot of people freak out and they say, oh my goodness, everything's going to explode. Now, remember I mentioned the Federal Reserve before. Why are we talking about the Federal Reserve? Well, we always have to, but let's load the SP 500 on top of the MOVE index for a moment. We've just got an overlay here. Now, what you might notice is that when we hit into these really high levels, sitting at around that 150-ish zone, or even where we're getting into right now, you may notice that actually couples with bottoming markets. Often there is intervention at around these points by the Federal Reserve or central banks. So that's something to definitely be paying attention to. And from my perspective, am I looking at this worryingly? Not really. I'm just looking at it as, where is the support? And I'm sure it's going to come through at some point if that starts to freak out or something we don't know about just suddenly happens. US 10-year, that's sitting at resistance, still has been. US 2-year obviously up as well. We haven't spoken too much about the non-farm payrolls result in this video. The main reason why is we did cover it in our Monday live stream. But really, guys, it's just another number you shouldn't be paying attention to. 2 months of revision downs equaled, I think it was a loss of 112,000 jobs. So basically that means that pretty much like for one of the months, half of the jobs that were supposedly there, about 150, got wiped off. Oh no, sorry, we don't know about those. Those jobs don't exist, guys. It's okay. We're back down to 79,000 now. So huge wipe-offs. This is nothing new to people who've been watching the channel before. I always say non-farm payrolls is a great way of getting the liquidity in the market. So often the market will trap retail traders. It will go off in one direction, then go the opposite way. Sometimes it'll push highs and lows, and you can take advantage of that. But in this case, of course, it was a weak jobs number. Why? A lot of people blaming, of course, the hurricanes, maybe rightfully so. We'll see how the Federal Reserve reacts to it soon. Let's move over to the treasuries, holding well. Obviously, we're seeing a little bit of potential accumulations, probably a patience, react, don't predict on this one, and we'll see what happens. When we move over to the dollar and currencies, this will be a moving trade, I would think. The euro's trying to get above that daily 20, obviously hasn't closed above there, but you'll notice when we look at the dollar index, it's at that res. Will it be a Trump victory or a Harris victory? It's going to make a lot of difference to the dollar. So this will be certainly one we're covering during the live show, which will start at, again, 8 p.m. Eastern time. Let's go over to gold. Nothing much to report here. Maybe it moves on the session. It's still a series of higher highs and higher lows. Obviously, we're bullish on it long term. And a lot of people are then asking, what about silver? Should I buy silver? And we're getting into silver. Well, not yet, because it still makes a series of lower highs and lower lows. So no switch in trend. Nothing much in terms of major support yet on the left-hand side. Of course, this is where I've got it marked out as, and we will update when necessary on silver. Let's move to oil. Congratulations if you were bullish on oil over last week. It obviously made it back up to this res. We saw energy stocks going up, down, all around, positioning into the election. But really, where are we? We're at resistance. So it could go either way. If it bounces up, then ultimately we might be looking at way more buys. If, of course, it crashes here, could we be looking at a new low? Remember, if it is a Republican victory, it could be drill, baby, drill, and maybe that will crash oil. We'll still have to find what ends up happening to the oil market. And, of course, I think that's going to be based on flows and not our opinions so much. Let's move over to Tesla for a moment. 242, 243 in the post. Nothing much to really report here on Tesla. It really is in struggle land in terms of not really finding much. This may be, again, a post-election trade. Maybe an overreaction could happen, and that could be an opportunity. NVDA, stuck in the middle of nowhere land. Still overall very bullish after its breakout, but again, like semiconductors, they may pull back a little bit. If we hit a 5620 on the S&P, then of course NVIDIA should be hitting a support at the same point. If we go to solar, you can see here solar with the island reversal, very bullish, big volumes over the last 24 hours as well. Could someone be positioning ahead of the election? I'm sure someone is trying to gamble into it. It's not a bad setup down here. It's getting worse now. Overall, it's a big wyckoff. And of course, this will ultimately be who actually wins. Another one that's who actually wins will be DJT, also up in after hours trade and the session up about, 18% overall. Big moves. I would expect this one to move 30, 40% on the session. It's going to be the most wild and volumes are huge. Is it a gamble? Yeah, probably. It is. So I would be careful with my money. US 30. Now the Dow is interesting. We've got an alert set above 42.6 because I think that could be an early sign of course, turning up to the upside. Intel kicked out and now we've got NVIDIA coming in. So the Dow's changing, which is cool. But at the same time, not much in terms of structure there just yet. Good indicator, though, potentially in the future. The US 2K, still finding decent base at around 2,200. It's been much stronger than some of the other markets out there, which is in line with what we're discussing at the moment. I think you could still wipe the lows or even go as low as 2,100 before finding buyers. But I do think flows are starting to turn to the upside. And that's based on technical analysis breaks in the weekly and a few other things. And ultimately, we're looking for around 2,430. What about the Nasdaq? Still weak at this point. No buyers have come in just yet. And the market is probably looking at trying to get to 19,750. If it does breach below that, where's the gap? Sitting around 19,400. So, of course, load up your Qs or load up your NDX and make sure you're aware of where the gaps are. We've got this big gap down here at 471. Now, if we hit that, would that be a buy? Well, based on the S&P, it's going to be a very key put wall, and I'd expect that to become quite well struck overall post-election. So we've got a gap on the upside, we've got a gap on the downside. We do have a bit of, let's see how this plays out in terms of reaction, but we do know that also that the average pullback stat is only about 4 and a bit. So it's really, 3 down is not too bad, 1.5 more, well, you're splitting fires. Maybe it's a point where you start to begin on the scale. Let's have a look at Solana. So crypto markets, this has definitely been better than Ethereum. You might think it's all over and it's looking terrible. Not really. It's got the trend line behind it. It's breached out, which I think was really positive. And this is a good key zone. So 150 and 50 will be an important zone for Solana. Ethereum is kind of similar. And then Bitcoin is trading off its large trade volume level. So this is a very key support. I think if Bitcoin drops this, let's say it overreacts, again, I guess the kind of thought process here would be if there's a Harris victory, potentially we end up seeing this tank initially. Again, I still think the stats are pretty bullish both ways. So if we do end up pulling back, then where could we sit? Maybe in this demand zone. So this is going to be a very important area, about 62.5. I'm interested to see whether we get down there in that event, or even if it was a Trump victory and maybe it drops for whatever reason, then that'll be a big one. These are two very heavy levels though. So we'll see how Bitcoin, I'd like to see Bitcoin hold above this low. I don't really want to see it below that, at least even temporary it can be, but not on a higher daily or weekly, because that would be quite negative, I think, for the overall flow. In terms of the week, what have we got? Well, of course, Wednesday, or actually we'll go to Tuesday first. So Tuesday is going to be the presidential election. Do remember we have PMI. No one will care about that because it'll be about the election. Then we scroll through to Thursday. And of course, we have the federal funds rate and the FOMC statement and press conference. It's a big week, guys. I'm sure there'll be all sorts of word jumble over here, depending on what happens on the election, and we'll see what happens. But 25 basis points is the expected cut. I would say they'll stick with that. Again, if it's 50, does that matter? Possibly not. We'll see. I mean, obviously, another 50 would really have to start questioning whether they've stuffed it up completely and just people don't know it yet. So at this stage, 25 basis points, what we expect. If you enjoyed today's video, then make sure to subscribe. Remember to join us for the election special. The markets always have a nice amount of movement during the instruments and of course, the election period as the uncertainty becomes certain. And make sure as well to follow us over on X for the latest updates and check out everything else we do. Thanks so much, guys. You have a fantastic day. Bye for now.